Keith, now I want to ask you about stable coins. They have increased the demand for these safe haven assets in the US Treasury. Do you think that the institutional interest from these stablecoin issuers into the Treasury has bolstered demand for the US dollar and has bolstered demand for the US Treasury?
In the US market, stablecoins don't increase the demand for the dollar and hence the Treasury bond. They substitute for something else, which would be a bank deposit. It's a disintermediation of banks, and people are saying I'd rather deposit in Tether than in JP Morgan Chase. So it's disintermediation of the banks in the US. In the rest of the world, stablecoins might be a form of dollar that otherwise they couldn't have had at all. They would have had to hold rupees or lira or something like that. And now there's a market where they can hold stablecoins. So yeah, that would be an increase in demand in treasuries relative to what previously had existed. It's one of the reasons why the dollar can't be displaced. The treasury market is so massive that even if China is making a big move in or out of something, it's not really going to move the treasury market very much. And there's no other currency that comes remotely close to that, having that kind of liquidity, that kind of depth, other than gold. How much does that really change the interest rate that we see versus what we would without the stable coins? Hard to say, but I don't think it's a massive effect. I really don't.